What's up, guys? Mickle here, and there is so much going on in the cryptocurrency market right now. In this video, I want to talk about why we have seen such a large sell-off to start off 2024. We just actually got some brand new information that shows that a massive player was just forced to liquidate a significant amount of cryptocurrency assets. In this video, I want to talk about whether or not this is going to impact my bull run theory for 2024, talk about how much longer this selling pressure is going to last. Guys, this is absolutely fascinating. You are not going to want to miss it. We also got some brand new information revolving the SEC hack that happened the other week, in which they essentially put out a fake tweet about the spot Bitcoin ETF being approved, as well as some critical information at the end of the video about the Binance SEC case that kicked off today. Guys, there was some very good news for XRP in that case. Make sure to stick around to the end of the video to see that. You are not going to want to miss it. Like always, your support means so much to this channel. If you enjoy these videos, make sure to take a quick second to like this video and subscribe to my channel. It's really going to help me out so much. I'm almost at 50K subscribers, guys. I would love to get there. So if you aren't subscribed, make sure to do that. Also, if you're in a good place to buy some XRP, make sure to check out my favorite exchange Uphold down in the description of this video. With that said, though, let's jump right into it, and I hope you guys enjoy the content. Guys, I want to start this video out and just quickly cover what we just learned about the SEC's account getting hacked 2 weeks ago and putting out a fake tweet about the Bitcoin spot ETF, because, guys, this is just turning out to be shockingly bad. We just found out from Eleanor Terrett that it turns out that the SEC didn't even have multi-factor authentication turned on. Essentially, you know, when you sign into an account and your account says, hey, do you want to get a text message to make sure it's you, and you type in the code? Yeah, the SEC didn't even go through the security precautions to turn that on. This is the most basic security precaution out there. Essentially, every single account, regardless of how unimportant the account is, I mean, I have one on my freaking Amazon account, has this two-factor authentication. And the SEC was so lazy, they didn't even have this on. Guys, the SEC is in charge of cybersecurity standards for public companies, and the SEC themselves didn't even have two-factor authentication on their own SECX account. Guys, if another public company did this, the SEC would be administering billions of dollars worth of fines, and yet the SEC does this and acts like it's no big deal. Guys, this is absolutely shocking behavior by the SEC. It really just goes to show how much of a hypocrite the regulator really is. I mean, the fact that they could just blatantly have such poor security protocols in place for a regulator who's supposed to be protecting the integrity of the public markets is so embarrassing. And guys, I think it just shows once again that the SEC has continued over time to talk out both sides of their mouth, continue to expect public companies to do things that they're not willing to do themselves. And it really just shows that the SEC doesn't follow any of the standards that it makes other companies follow. Guys, I think we have seen this over time with their ability to just lie to courts, their ability to make stuff up, their ability to change their opinion after any given thing happens in the market. Guys, the SEC is a complete joke, and this is just another great example of that. I want to move on, though, and now talk about the sell-off we're seeing right now, because, guys, I think a lot of people are kind of confused in the market. They saw these Bitcoin spot ETFs go live, then the cryptocurrency market started selling off, and a lot of people are kind of wondering what happened. Guys, I want to talk about something very, very interesting we just learned about a key player being forced to sell a very large amount of cryptocurrency. But quick, I just wanted to show you this. Guys, what this is the Bitcoin chart. And what we can see is we just filled a very critical gap on the Bitcoin chart. Now, this isn't something personally I follow a lot, but what I know is typically when you have these gaps open on the CME, we almost always fill them. And what we just saw is Bitcoin came down, wicked down here to close this CME gap. To me, this could likely indicate we are very close to a bottom. Typically, when we are in a bull market, Bitcoin will pull back to fill these gaps, and then after filling the gap, move back higher. So this is one thing I'm going to be watching closely, but this is just more of a technical thing. I want to get more into the fundamental reason on why Bitcoin's selling off. And guys, the biggest reason why Bitcoin is selling off right now is because of GBTC. Essentially, GBTC has the highest fee out of any ETF, and people who are invested into GBTC are fleeing out of the product, forcing Grayscale to sell Bitcoin on the spot market. But guys, it's not just everyday investors. What we are learning is actually that FTX held a large amount of GBTC and was also forced to sell all their GBTC, dumping Bitcoin on the spot market. Guys, what we just learned is FTX was forced to sell $1.1 billion worth of Bitcoin over the last couple of days. And to me, this is a very obvious reason why the market is likely selling off. But the good news is FTX has now sold out all of their GBTC Bitcoin shares. So this is likely going to provide a lot of relief on the market once all that Bitcoin has officially been sold off. Now guys, this is something that really wasn't being heavily reported on, but there is no doubt in my mind that this likely caused a huge impact on the market. Now, what's so interesting about this, though, is at the same exact time, what we are seeing is the big asset managers are accumulating Bitcoin at a rapid clip. We now see that institutions who have issued the Bitcoin spot ETFs now own over 14,000 Bitcoin. These ETFs have only been live for a couple days, and asset managers are accumulating thousands of Bitcoins daily. Guys, to me, this very clearly shows that these Bitcoin ETFs are going to drive long-term demand on the asset class. And what we're seeing right now in terms of the price of Bitcoin is really just a mix of a technical move along with FTX forced to get rid of the rest of their assets. But the bullish thing we know that's happening right now is we are not watching net outflows of Bitcoin from institutions. Instead, we're watching institutions accumulate Bitcoin at a rapid clip. What I'm trying to say is right now, Grayscale is putting some weird one-time pressures on the market, but I think these are going to be over very soon. Once essentially we have the original Grayscale rebalancing done, and once FTX has done dumping all of their Bitcoin, guys, then there's going to be a lot less Bitcoin being sold into the market, and we're really only going to have the pressure of these big asset managers buying up the Bitcoin. This is super interesting to me, something I'm watching very closely. And if it really is the case that most of the selling pressure we're seeing right now is just FTX dumping their Grayscale holdings, and we're just filling this CME gap, guys, to me, we likely already have seen the worst. We're going to have to see how this plays out over the next couple days, but I don't see anything bearish happening in the fundamentals. To me, it looks like institutions are buying this dip heavy. I want to finish this video off and just quickly talk about what we learned in the Binance case earlier today. Guys, the Ripple SEC case is over, but the SEC is deep in litigation right now between Coinbase and Binance. These are cases I'm going to be watching very closely because it's really going to define how the SEC gets control over the rest of the cryptocurrency market. Now, guys, as we know in the Ripple SEC case, we essentially learned that the assets themselves, the underlying tokens, are not securities. This has been something that the SEC has pretty much been forced to capitulate on. They are now admitting both in the Coinbase case and in the Binance case that the tokens themselves, the assets, are not securities. But one thing that Binance did run into a lot of trouble on is actually the promotion of their BNB token. Essentially, Binance promoted the BNB token so hard on their platform that despite the fact that the BNB token isn't a security, the judge seems like she's leaning towards the fact that Binance created a contract with its buyers, making them in a security relation with the BNB token. So this is kind of hard to wrap your head around, but the judge is essentially saying, okay, BNB itself is not a security, but Binance created a security when they offered and sold the BNB token on their platform. To me, this is likely going to be a big issue for the exchange tokens. If all these different exchanges all created marketing campaigns behind their tokens, well, it looks like Binance is in trouble of essentially creating a security with their BNB token. Now, I don't think this is going to be the end of BNB or the end of Binance in any manner, but it's going to create big issues for how these exchange tokens are treated in the United States. We have seen win after win essentially against the SEC in court, and it looks like the BNB token might be the SEC's first big win. Now, I said at the beginning of this video that this was actually good for XRP, and I want to talk about exactly why. The reason why this was actually good for XRP is because the judge in the Binance case, despite having skepticism around the BNB token and Binance the platform, flat out said multiple times that she really appreciated the ruling in the Ripple case and thought it was really well thought out. She also went out of her way to confirm that outside of that exchange token product, it seems to her like most of these things on the secondary market are also not securities. So she actually went pretty far to reaffirm everything we saw in the Ripple SEC case, and instead was focusing mostly on saying, hey, this BNB token specifically, that one seems like a security to me. So guys, nothing we're seeing in the BNB case or the Binance case really implicates XRP. And in fact, it looks like most of these courts are actually saying, hey, things like XRP clearly actually aren't securities, but maybe things like BNB are. Now, I just want to make it clear right now, we still don't have any rulings in the Binance case or the Coinbase case. I'm just going based off what the judge was saying. But to me, it's looking extremely likely that a token like XRP traded on the secondary market is never going to be a security, but other tokens like exchange tokens likely have a chance of being designated a security. Guys, this is super, super interesting. It is going to essentially shape the way the US government looks at how to regulate these cryptocurrencies going forward, and it really just reinstates how lucky the XRP community was when Ripple beat the SEC in court. Guys, a lot of these other exchanges, I think, expected a cakewalk after Ripple won, and I think they're getting a lot more pushback than they originally expected. The good news is, though, and I don't think enough people really appreciate this, Ripple's win is not going to be reversed. XRP is now being deemed not a security, essentially in these other cases as well, as that case continues to be referenced. Ripple's legal team did an outstanding job, and I think a lot of people really underestimated how big that win is going to be later down the road. Anyway, guys, thank you so much for coming. I hope you enjoyed this update. If you did, make sure to like and subscribe. It really does help out so much. And for now, Mickle out.